Morning, everybody. It's the 7th of July. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Good morning, mate.
All set for this evening?
Yeah, it's the time seems to be flying by this morning, so I don't know whether that'll be the same case for the rest of the day. I think the sort of
11
like
hours time will be 11 minutes away from kickoff.
yeah, yeah, it's quite exciting, isn't it? A good match last night.
Yeah, very
Italy,
good.
Spain. I mean, the Spain I thought really deserved something out of the match,
Yeah.
but in the end, the sort of the strength of the Italians and their goalkeeper sort of won through. So
Yeah. Yes,
adios.
exciting. Adios indeed. Okay, let's get stuck into today's headlines and market highlights. So US stocks yesterday snapped a 7-session winning streak, although they only posted a very small decline, and also crude oil slid after the OPEC plus discussions were scrapped, and that was due to infighting. So we have seen a little bit of movement there, and of course we'll come onto the chart shortly to see what impact that's had. Most Asian stocks later fell, and treasuries held on to advances on concerns about the economic recovery from the pandemic. So fears over coronavirus continuing to obviously impact markets in some way, shape or form. Traders are now looking ahead to the Federal Reserve minutes, which are due out today, for more clues on when the US central bank may begin tapering the substantial asset purchase program that is in place. And obviously people will also be keeping an eye on the gold markets as well when they have when the meeting minutes are released later on. Just going back to something that happened earlier in the year, the Archegos capital management blow up. Looks like it's claimed a scalp as Nomura, the big Japanese investment bank, has pulled the plug on a chunk of its hedge fund business. They're actually going to stop offering cash prime brokerage services to US and Europe, and given clients around 6 months to find a new provider. So, that's a pretty big deal. And obviously, they'll be hurting from that. In terms of what's going on the geopolitical scene, the Russian government hackers, part of the group known as APT29 or Cozy Bear, are said to have breached the computer systems of the US Republican National Committee last week. Obviously, Joe Biden's been taking a fairly sort of hard line with cyber attackers. Recently warned Vladimir Putin about it, so I guess we'll have to see how he reacts to this, but yet more evidence of the Russians playing silly buggers with computers.
No, well, that's because they know a lot about computers, don't they?
They do, yeah.
But is he saying it's the Russian government behind it, or is he saying it's just Russian?
They are Russian government hackers, apparently. So yes.
Yeah, rubby. I don't believe that for a start.
Yeah, you're just trying to stay on the good side of Vlad, aren't you?
Yeah.
Big Vlad. Don't want him coming for you.
No.
Okay, that's pretty much it. Obviously, all eyes on this figure later. Sorry, the numbers later today from the minutes from the Federal Reserve. So, Steve, we can get stuck into some charts. Where do you want to start today?
Well, I'm more interested in the numbers from the oil inventories, really. I've done a video on this. We'll post it later. It's actually on the YouTube channel now, actually, if things have worked out correctly. Although I do have to send it off to somewhere else to get it posted. So crude oil, WTI crude oil, yeah, very significant bearish day yesterday. Will we get the follow through today? We are, as we've said for a while now, we're in this impulsive move higher, and we've hit the resistance band, and we've rejected quite aggressively. So it is posting a bearish candle on the weekly chart, but we do need a little bit more follow through to make us a little bit more cautious and maybe possibly start this ABC correction that we've been looking for. So around about 76.80 was the major resistance from the 2018 October high, and we have stalled just in front of it and rejected lower, trading around 73.50 now. But we had a $4 sell-off yesterday, so that is pretty significant in any terms. What is that, about 4 or 5%? I don't know, just quickly work that out in my head. Bearish outside candle, pretty significant. It's engulfed the previous 3 days of price action. However, we still need it to purge these supportive areas. Ichimoku cloud support, that's pretty good, and it has held. So technically, we've had a bit of a rebound off the 72.38. It was a reaction low here and here, and we've got a more significant one below at 71.63 before $70, big round number that we will probably find some support at as well. But initial reaction, is this a smaller ABC correction? Maybe look to fade into around about the 74.50 area, but we've got oil inventories out later, so be very careful with that. Anything can happen. The same sort of levels we've seen in Brent crude oil. Again, the level here, it trades at a premium. It's trading at a $1.20 premium currently. We reacted off 73.75, so we've got over 100 point rally out of this, and it's looking pretty nice on a intraday short-term basis. But after yesterday's bearish outside candle, is this going to be a short-lived rally? We'll have to wait and see. Seems like the indices have sort of recovered quite nicely, so potentially we could get a full-on recovery from here. But really looking at 73.74, then 73.20 as the significant support below there. That would take us below the Ichimoku cloud also, and then this will form resistance. Natural gas, I've been talking about this for a while. Obviously the daily chart, we'll just refresh you on there. The triangle formation, we broke higher, got up to 338, had a swing back retest of the breakout, and it held really nicely, forming a bullish hammer here and a morning star reversal formation. We can project it higher, got up to 380. That's the significant resistance in natural gas, and now we are in a band of support resistance between 360 and 380, and it's playing really nicely now. We've had the reaction off the 360 again 1, 2, 3, 4 times. Looks pretty good to me. So really looking to potentially retest the 380 resistance. Gold had a bit of the similar sort of thing. We had the reaction yesterday. The dollar went very strong. Gold pulled back, and I thought, you know, the break above $1,800, that's it. It's all over. They think it's all over. It is now. But 1790 held. 1790 was the resistance that we picked up here. 1790.44, and we did say that a break and a close above there was potentially a reversal in this short-term move lower, or the medium-term move lower that we're having. We managed to get up above the 1800, even up to as high as 1815, which was a congestion area around back here. 1825, I think, was the next resistance above that before 1845. And hey ho, here we go. The 2 o'clock to 6 o'clock candle formed an evening star formation, and we plummeted lower, but 1790 came in and saved the day. Let's highlight that on the chart so that we remember about that in the future. I'll get rid of the 1797. It's not 1800 is obviously a pivotal area because of the significance of round numbers and psychological trading, but we're trading at 1805 again, so it feels pretty good. And if we see a break of 1815, the 1845 level opens up for me once we hurdle the 1825. So yeah, support coming in at 1790, resistance 1815. Silver, let's mention silver because we were looking at that the other day. Again, Ichimoku cloud seems to have provided resistance as well as these previous swing lows and reaction levels, and looking pretty nice on the for the bulls this morning as we enter trading, and really sort of based on the reactions yesterday, whether that will be significant or not. Dollar obviously still looking pretty firm, trading at 92.50 on the dollar index. Let's have a look now at should we have a look at cryptos? That's too many cryptos there. Right, yeah, so still 35,000 seems to be the level to watch now. We've had the push higher, rejected at 36,600, then at 36,000, and significantly really didn't get much of a reaction out of this yesterday. We did have a sell-off, but it wasn't as significant as some of the indices and commodities, and the cloud is forming support. So really levels to watch on here for me: 33,500 down to 32,700. That's the supported area. 35,000 resistance before 36 and 36,600. Above 36,600, it does open up a move back to 41,000, but we're seeing lower highs again. So I've still got my bear hat on for the cryptos. Let's take a look at indices now. Here we go. Felt like the end of the world for a few minutes yesterday, but it wasn't, thankfully. And we saw this 4-hour candle between 2 and 6 o'clock, and significantly broke all of the support levels, and even broke 71.06 for a short period of time. Got down to, don't panic, Mr. Mannering, 70.75 before we reacted higher. And we could see the really nice reaction we've had this morning. So normally we get a bit of a reaction at 8 o'clock. We had a bit of a further spike higher at 8 o'clock. You can see here it's rejected that, but it feels like the indices are really sort of like holding on with their fingernails at the moment. Again, on the DAX, I mean, this is pretty choppy on the 4-hour chart. You know, even to sort of like see that basically 170-point rally in the last 4 hours, that's not bad. Support below on DAX is 15,454. A break of there would then take us down to 15,350, which is a previous level, although I don't think now that is as significant as 15,278. So for me, they're the two supportive levels below. Above, really, we've got to capture ground above 15,711 before 15,761, and then the all-time high. Is it all-time high? Yeah, looks like it. 15,810. So still a few questions to be asked on this. It does feel like the indices are bouncing back quite ferociously. Dow across the water, similar sort of trading and reaction, and looking pretty positive this morning. Nasdaq, blue skies, all-time highs again in the Nasdaq. Where's the all-time high this morning? 14,850.
So it did close a bit lower yesterday, but
yeah,
roaring back today on Amazon deal. I think the shares are quite significantly higher overnight, so yeah, dragging it all higher.
I mean, just this sort of formation here is, although it's bullish, it's sort of very, very steep. So we're getting a nice little trend line to watch on the short-term basis. And a break below that sort of steep trend line should see quite a volatile move.
So just why Amazon's gone up quickly, Steve, they got a year-long Pentagon cloud, they got a contract with the Pentagon. So it was a cloud deal that was all going to Microsoft, but the Pentagon have decided to split it up between various vendors. So Amazon are involved in that now as well.
Okay, so they're sharing out the wealth between, you know, the sort of like
10 billion cloud
small
contract,
companies.
So not pretty significant deal.
Yeah, wealth goes to the wealthiest, I suppose.
Yeah, money goes to money.
Yeah, couldn't be happier. Couldn't be happy for them.
Jeff Bezos' leaving gift.
Yeah, nice little golden handshake. But significant on the S&Ps, just looking at this on the daily chart, hanging man candle. We like hanging man candles. We had a load of them on the weekly charts a while back, but it just blew through them. But that's a potential evening doji star formation. So let's watch out for there. But we're not far from the all-time high. So, you know, what do? You can keep trying to fade this and having to stop just above the all-time highs, but it's only worked on a handful of occasions, and it hasn't. When we do get the sell-offs, they're quite aggressive and quite volatile. So you know, there is opportunity there, but the grind higher continues. Amazing. China 50, I'm sort of like this. This for me is going to be the significant one. I've talked about it for a while, so I'm boring everyone. And with a decent trend line resistance now above, and we can see bearish engulfing candle on the daily chart forming currently, which will break the 5-day sell-off we've had. So yeah, it's a little bit of respite for the indices, even China lending a helping hand. I think the Hang Seng held and was the one at the bottom of the channel, but we're posting a bit of a bullish hammer on there. I think we just nailed the low of that overnight on our intraday trade ideas. So we're looking to sort of for this to sort of rally today. I think that's it, mate. You can talk about the FX.
Thanks, mate. Good roundup there, Steve. Okay, FX dollar index, usually the starting point for us. Big move yesterday. Engulfed all the previous day's candle, pretty much gaining back all of what it lost on the 2nd of July. Really strong move to the upside, although it didn't close above the highs there, so still a bit of work to do, but clearly some decent underlying strength there. And now again looking to target this 93.02 level in the very short term, and above that we'll be looking at this 93.43, which is very significant. As we've talked about previously, it would then form a double bottom pattern on the longer term charts and project much higher prices over the medium term, so still in favor of that playing out. In terms of euro dollar, obviously big weakness yesterday on the back of the dollar move, engulfing all of the previous day's candle. So a bearish outside candle formed there. Big spike to the upside early on, but rejected all of that throughout the session. And on a little bit of a pickup in volume as well. But significantly, we've closed for the first time below this support level at 118.47. So I'd expect any rallies today to be limited really towards this sort of 1850 level, and we'll be looking to fade those in anticipation of a continuation lower. And that gets us ever so close to forming this head and shoulders top on the daily chart that I've also been talking about for what feels like forever. But we're getting very close now to the neckline, which is on this blue line here. Preferably, I'd like to see it take out this horizontal support at 117.04. Then, I think we can really get excited about some continuation to the downside on that one over a more medium-term basis, and really establish quite a nice trend that hopefully we can all get on and make some money on. Elsewhere, Aussie US dollar was my gun to the head trade yesterday. I'm of the opinion that this has already formed a head and shoulders top, which was completed back here on the 17th of June. I know we saw a little bit of a move higher, but maybe that was just a bit of a consolidation or forming a continuation pattern. Yesterday was really quite interesting because we attempted to get back above the neckline, and early in the trading session it looks like that was going well, but the sellers stepped in and aggressively sent that lower on some decent volume too. And we were closed significantly back below that support, that resistance level. A bit of a push up today, but for me, just probably another opportunity to fade it. So I may be looking at that again as my gun to the head trade later. And in terms of where I expect this to go over the medium term, the head and shoulders top pattern projects a move down to this level here, which is at 70.57. So I talked about that 16 to 1 shot on Aussie dollar yesterday, Steve. Nailed the entry on that one, and looking quite nice. So
lovely.
Could be a reward for the patient trader there. Looking elsewhere, quite interested on dollar CAD yesterday. This hasn't been a particularly great market for a number of months. Well, I mean, if you've been shorting it, then obviously it's been a great market for you because it's been trading in this downtrend channel. We saw a decent break up back in June. A little bit of a consolidation around here and some support seemingly forming. Decent push to the upside yesterday. I would have liked to see it take out the previous swing highs that we posted on the 21st of June at 24.86. We did have a little bit of a poke above, but unfortunately couldn't close there. But ultimately still looking pretty good. Obviously crude inventories today could potentially impact that as well. So keep an eye out for that. Dollar yen was quite interesting as well. That's been trading quite nicely higher. Has been my pick of the bunch if you've been looking to buy the US dollar. This has been really the best place to be, I think, from a trend perspective. Bit of a dip back over the last few sessions, but again, looks as though support has been found at this uptrend line. Buyers have stepped back in. It's early in the session today, but there's a green candle there, so potentially a decent area to buy in anticipation of move back to this resistance level we've got here at 111.71, and then above that up at 112.20. So still looking pretty good on that front. Cable, just to round off, not really much changed. Still trading in this range, potentially a double top forming, particularly if we break down below this support at 136.70. Outside candle formed yesterday, an engulfing candle, as you can see there. Again, a bit of a pickup in volume as well. So I think we're getting closer now to a test of this level, and obviously that will be pivotal, because if it does break, then we've got the top there and the top there forming that double top, break down through the neckline, then we can start looking for targets down here at 130.97, which is the measured move of that pattern. So all getting pretty close to make or break point on a few of these markets.
Lovely.
Okay, gun to the head trades from yesterday. Let's have a look. Okay, so I went short of Aussie dollar, as I mentioned, which was 2.89R on side at 9 o'clock. So pretty pleased with that. Bit of a bounce in that today, so I may have another go at that. And Steve, you were stopped out on silver, unfortunately, which obviously is the way it goes. But you fancying silver again today, or something else caught your eye?
Well, I was sort of like a bit disappointed with silver, really, aren't I? What are you doing to me? Actually, sort of like, I don't know, but from these sort of like sell-off on, obviously on the sort of like daily charts, they don't look great. They look like they're breaking up out of the sort of like bearish flag potential. Don't know what I fancy, mate. There's a little bit of me wants to sort of like sell into this, but I feel like I'm going to get a big slap in the face. Let's have a look at, even the cryptos could do that. Yeah, let me, when I'm desperate, I always go to Bitcoin and give it a little whack, because obviously you can get some sort of like quite decent returns on this if you do time it right. And there's always a good entry level which isn't far away. So let's look to fade this. We had a previous swing high looking back at 9 o'clock yesterday, and price action again looks to be stalling a little bit on these candles. So let's get short here at 34,936. Stop can be pretty tight, 35,336. So about a 400-point stop. And let's make the target a little bit more reasonable. Little 5-to-1 shot for you. How about that? As about those apples. Looking for it to sort of like fading it here, and looking for it to come back, pull back down towards these previous lows down here. Support 32,687. We'll take our profit just in front of that. Thank you very much.
Lovely jubbly. I did want to have a look at Aussie dollar, but it doesn't appear to be in a great spot to do it. But you know, I guess these never are, because we've got a gun to our head, so we've just got to make a call. So in the absence of anything else, I'm just going to go with it again. And this is what I caught yesterday, that decent move from the highs up there. Bit of a consolidation over the last few hours. I'm going to sell it now at 75.13. Going to target a move back down to these swing lows that we posted down here on the 2nd of July at 74.45. I'm going to go stop at 75.48. Just give it a bit of room to breathe. So it's only a 2-to-1 shot. But yeah, that's the best I can do at a moment's notice. So just going to leave it at that.
Okay, mate. Lovely. Good luck with that.
Cheers. Okay, so FOMC minutes tonight, and ahead of that we've got US crude inventories as well, as Steve's mentioned. I think that's pretty much it.
Wow. 25 minutes. That's not bad, mate.
Yeah. So hopefully we're in a jubilant mood tomorrow morning.
Yeah, you don't want to see such sad faces on this tomorrow.
No,
Tell you that.
might even just scrap it if it doesn't go well.
Yeah.
Just not turn up.
Oh, we've had a few thumbs up for that. Excellent. All right. Well, enjoy your day out there. Be careful of that oil inventories this afternoon if you're looking at oil. And see you tomorrow.
Yep. Cheers, guys. Goodbye.